Hello, everyone. I'm Matt Clark, research analyst for Money and Markets. So, with our weekly marijuana market update, remember you can check out the marijuana market update on our YouTube channel. Just go to youtube.com and search Money and Markets. Will be the one with the green logo. Don't forget to give us feedback. You can do that by emailing us at feedback@moneyandmarkets.com or leave a comment below in the comments section here on YouTube. We've had great feedback, and I really do appreciate that. Just again, send us an email, feedback@moneyandmarkets.com. I'm going to talk more about some feedback we've received most recently at the end of the video, so make sure you stay tuned. But let's get into this week's update. This week's stock comes from several of you who have asked for some analysis on KushCo Holdings Incorporated. It trades over the counter, and its ticker is KSHB. And here are some company details about KushCo Holdings. It distributes packaging supplies and branding solutions in the US, Canada, and Europe. It also provides vaporizer cartridges and accessories for vaping in both the tobacco and legal cannabis arenas. It creates and sells products used by urban farmers, greenhouse growers, and medical and recreational cannabis dispensaries. It operates a creative design agency, which I thought was kind of interesting, for cannabis clients that provide brand strategy, design, marketing, web app development, and e-commerce solutions. It was founded in 2010. It's headquartered in Cypress, California. It's a relatively small company. It's only got a market cap of about $68 million. So it's not a huge company by any stretch. Certainly not as big as some of the ones that we've covered in weeks past. Now, since its founding, the company's reported selling about 1 billion of its products, to growers, processors, and producers in North America, South America, and Europe. The company just recently reported its Q3 fiscal earnings back in July. It's on a different quarterly schedule than other companies. So this is Q2, but Q2 earnings have recently come out. But now this company reported its Q3 earnings back in July. It reported cutting its expenses by about 50% to around $12.7 million. It converted about 5 million of its senior notes that were coming due in April of 2021 into equity for the company, and they did that with what they call limited dilution and zero warrants, which is good. It gives us a little more liquidity and didn't come at a huge cost for the company to transfer those senior notes into equity. Now, its net revenue in Q3 decreased by 46% from the same time a year ago to around $22.3 million. Most of that was because of its tighter credit terms that it's extended to some of its smaller customers. We'll get into that here in just a second. It also had lower sales in its vape and natural products during the quarter. Its gross profit was about 10.7% compared to 17.8% in the same period a year ago. The company had a net loss of about $13.5 million compared to approximately $10.3 million in Q3 of 2019. That made its earnings per share loss about 11 cents per share. That is a little bit better than the 12-cent per share loss it reported the previous quarter back in Q2. A lot of its losses, as I said, were because the company started what they called its 2020 plan. It's an initiative that allows it to, or that it hopes will increase its visibility with larger multi-state operators, licensed producers, and lending brands. But what they're doing to do that is they're tightening their credit terms to smaller customers. So those mom and pop dispensaries are facing a lot tighter credit restrictions to receive product essentially on loan to sell and then pay back the company based on the sales in order to expand their business. Now, KushCo has slowed down the amount of money it was spending to keep more cash on hand. In the third quarter, its cash on hand was about $11.1 million compared to $11.4 million it had at the end of February of 2020. To give a little context here, the company had about $3.9 million in cash at the end of August 2019. Now remember, they sold $5 million in senior notes to help bolster that. So you have to kind of take that into consideration when you look at the overall balance sheet for KushCo. Its financial outlook for the fourth quarter is a bit hazy, and a lot of that's due to the coronavirus, so it's not really unexpected. It expects its revenues to be about $24 to $26 million, and its adjusted EBITDA, if you will, to be between a loss of $1 million or a gain of $1 million. So that's a pretty big swing there for its projected EBITDA, its earnings after depreciation. KushCo's cash guidance for the next quarter is between 6.5 million and 7.5 million. That's a 50%. That's 50% less than the first quarter of 2020. Now, its balance sheet is challenged, to say the least. As I said, it's got about $11 million in cash, but around $30 million in debt. Its operating cash flow is a negative $33 million, and its trailing 12-month income is negative $82 million. So it's a pretty long way from seeing any type of profitability, which is not necessarily uncommon in the cannabis market. But these negatives are relatively high considering it's a $65 million market cap company. The stock dropped to about 54 cents a share back in March of 2020. It rebounded to about $1.20 per share in June, but it has significantly pulled back since then. It's now at around 57 cents a share. That's only about a 5.5% increase off of that March low. That's a pretty heavy hit, and it doesn't show a lot of momentum, and we'll talk about that in just a second. But just to kind of add some clarity there, its 52-week high was $3.96 a share. It's nearly 600% off of that right now. That's pretty significant. The stock is really struggling to find any kind of upward swing. It's trading relatively flat of late. I look at Money Market's chief investment strategist Adam Odell's Green Zone rating system, and right now KushCo ranks a 21 overall. It means we're pretty bearish on the stock and expect it to continue underperforming the rest of the market over the next 12 months. It ranks a 12 out of 100 on momentum. Remember, the higher the number in the ranks, the better. So it ranks at 12, and that means 88% of all of the companies ranked with no market cap are actually better. And its stock chart, as you can see, kind of reflects that lack of momentum. The stock ranks a 14 out of 100 on volatility, which means it is a very volatile stock. And we know that stocks with the highest volatility typically underperform and pose a pretty unduly high risk. We also try to avoid stocks that are in downtrends and with lagging momentum, which this stock clearly is. Now, KushCo does rank in the mid-range. In size, it ranks a 57. In value, it ranks a 54. In growth, a 46. And quality, a 42. So it's right in that mid-range, but not really enough to get overly excited about if you just use the stock rating system. Now, even considering those rankings, you have to add in some fundamental analysis, like I always say. And in doing that, and looking at its balance sheet, looking at its debt, looking at its cash, looking at its sales, looking at its EPS, looking at its ratios, looking at its return-ons, I would probably stay away from KushCo as a potential cannabis investment. It's really showing no upward momentum at all. I'm really concerned with its balance sheet. And if you just combine those two factors right there, to me, that's a pretty big red flag. I'm concerned with its debt, especially when you consider the much lower cash that's available to the company. You've got $30 million in debt, $11 million in cash. That for in the cannabis industry, it's pretty common, but it's still very concerning. Its one-year earnings per share annual growth rate is minus 27%, so it's not really growing at all. Analysts do have a high price target for KSHB. It ranges from a low of $1.50 to a high of $2 per share. But I think it's going to take a long time for it to reach that mark. The company's trying to refocus its efforts, and I think that's okay. I'm not sure about really shutting the door on some of the smaller cannabis operators and some of the smaller retail sales in order to do that. But I understand, I get it. Your larger clients are more apt to pay quicker, and they're more apt to pay, what they're owed, as opposed to the smaller ones, which may tend to struggle because sales aren't where they are. I mean, I get it. I understand that, and you want to reduce that risk, so you're making it a little more difficult to, lend product to those smaller companies. You're making it much more stringent, maybe more of an upfront payment, more, maybe a bigger, less of a profit percentage to the operator and more to KushCo, whatever those tighter credit terms happen to be. I understand that, but I think that it presents some challenges in terms of sometimes those mom and pop operators can be, a backbone in the cannabis industry, and can be your biggest sales, where your biggest sales come from. So I think it's a bit of a risk for KushCo to do that. However, like I said, I understand. I get it. I understand that's what you want to do. At this point in time, I really don't see a lot of upside in KSHB right now. It's going to take quite a while for KushCo to hit those analyst projections and share price, whether it be on the low end and even the high end. It's trading sideways. There's no momentum to it. I'm really concerned with his volatility. I'm really concerned with his balance sheet. I just don't think KushCo is a company to invest in at this point if you're looking at trying to bolster your cannabis portfolio. So that's what I have on KushCo. Now, I want to update you on some of the cannabis stocks we've talked about before. Last week, I talked about Aphria Incorporated, which is trades on the NASDAQ as APHA. I mentioned that I like the company. I just don't really like it right now. Well, the company stock has experienced a short-term pullback, and it's down about 4%, even just in the last 7 days. So other investors are taking some heed. They may be cashed out on some profits on an earlier uptick with Aphria, but it is starting to drop lower a little bit. I would wait. I wouldn't get into this right now. I would just kind of pump the brakes if you're into it. If you are into it already, I mean, if you want to sell for a loss, that's okay. If you want to hold and see if it bounces back up, I think that would be prudent. Also, a few weeks ago, I talked about Curaleaf Holdings Incorporated, trades over the counter under CURLF. That's CURLF. I was bullish on the stock, just not as bullish as many other analysts. Well, the company did recently hit $1 million in sales of its Elite Life cartridges in Florida alone. They did it in under 30 days, which is pretty impressive. They did open their first dispensary in Brandon, Florida, but the stock has still suffered a bit in September. I think it's a buy and hold. But if you're looking to get rapid profits out of this company, it's probably not the best cannabis stock for you to get into. Now, a few weeks ago, I asked you to email me and ask me and tell me why you're interested in cannabis stocks. Your responses really helped me and my team tailor our content on this channel towards your interests and kind of what motivates you. And I've had some great feedback, and really keep that coming. But Raymond just sent this in recently. He said, I grew up around cannabis. My grandparents grew it, and used it primarily as medicine. I'm excited about its potential for both legal profits and to help mankind. That's a great reason to get into it. Really, I always stress to really buy what you love and buy what you know. And clearly Raymond has done that because he seems to be very excited about cannabis, and he has some knowledge of it with some lineage. So I think that's a great deal, Raymond. I think what you're doing is spot on, and I would keep doing that. And thank you for your input, by the way. Now, Bill recently said he was in cannabis stocks and waiting for them to be legally accepted, as is everyone, basically. But he did ask a couple of great questions. I want to tackle those. He asked, how long do I think it'll take for cannabis to succeed, and what are the main opponents for their future success? Great questions, Bill. Those are great ones, and they weigh on the minds of cannabis investors and cannabis operators on a daily basis. Now, to me, success in the cannabis market will come when two things happen. One, cannabis companies have to attract significant capital from large companies, because right now, the profitability of cannabis companies is next to non-existent. You can see how successful a company like Canopy Growth Corporation, which is trades on the New York Stock Exchange under CGC, has been since it received a nice investment from beverage giant Constellation Brands. Constellation Brands makes Corona beer, and they make other packaged beverages as well. Now, despite the recent downtrend of all stocks, CGC has now become the largest cannabis company by market cap in the world. And they didn't do that on their own. They did that by and large with a lot of help from investment from Constellation Brands. So I think it's that kind of large money that the cannabis industry needs to start attracting. It's not going to happen right away because the cannabis market is still on very uneven footing. But when it happens, then I think you're going to start to see more and more profitable cannabis companies, and you're going to start to see stock prices reflect that. Now, the other thing, obviously, that has to happen for cannabis companies to be successful is broad-based legalization in the U.S. Both parties in Congress, both Republicans and Democrats, have entertained the notion, but it's still been a very difficult sell. I think it might be a little easier with the coronavirus because state and local governments are really struggling with incoming taxes. They're just not getting that as much as they were before, because basically people aren't leaving. They're not leaving their homes. They're not going out. They're not doing the shopping. So cities, states, counties are not getting that tax revenue. And cannabis sales would be a way to help kind of infuse that. It wouldn't necessarily solve the gap, but it would certainly help. I would like to think that we're a year away from federally legalized cannabis in the U.S., but I'm really cautiously optimistic about that because Congress does not move that fast. There's a lot of things that have to fall into place before it happens, and I just don't know. I don't have a crystal ball to be able to tell you. I'd like it if it were done in a year, but I think 3 years is maybe a little more realistic because there's going to be a lot of regulation to pull in. You're going to have to pull in the FDA. You're going to have to pull in a lot of different agencies to make this work. And that's a lot of moving parts, and Washington does not move as fast as we'd all like them to, as we all know. Now, as for the main opponents you ask about, well, cannabis is considered a sin product. It's just like alcohol and tobacco. And I think a lot of the same opponents for alcohol and tobacco are the same ones that are opposed to legalizing cannabis. However, those voices have become a little bit more muted in recent times, especially with considering how states are making medical and recreational cannabis more legal on the state level. However, states legalizing cannabis don't solve the issue, doesn't really solve the issue of what's called interstate commerce. Now, for the purpose of cannabis, just to say what interstate commerce is, it allows open trade between states with legal cannabis markets. So if you look at the West Coast, for example, California, Washington, and Oregon, removing interstate commerce bans would allow growers in Oregon who have an overabundant supply of cannabis to be able to sell that cannabis to companies operating in California or in Washington, where supply is not nearly as abundant. But right now they can't do that. So you have these producers, these growers in Oregon that are sitting on this mass quantity of cannabis, and the sales in Oregon just really don't really dent the amount of supply that there is in Oregon right now. So by opening up interstate commerce, by federally legalizing, or at least by removing the interstate commerce clause, would help that. It would certainly allow much easier trade between states, especially in the cannabis market, which would then bring costs down for companies operating in various states because they'd be able to sell their product on a more broader market. It would also cut back on the illicit cannabis market, which is pretty rampant right now in California. You've got a lot of pop-up illicit dispensaries that appear to be legal, but they're not. You see, in California, there's 800 licenses, and that's it. That's a big state and a very small amount of licenses to sell cannabis. So you have a lot of these pop-up dispensaries that are selling it, but they're not legal to do it. They're doing everything, all their product and everything is legal. They're just not able to do it legally themselves. It would also make it cheaper for cannabis companies to establish markets in states like New York. Now, it's not legal in New York yet, but it looks like it may be trending that way here in an upcoming legislative session. Right now, with the interstate commerce clause and the lack of ability to trade interstate between cannabis companies, it's going to take billions of dollars for a company to come in and establish grow operations and really establish a footprint in New York. Now, granted, it's 19 million residents. It's a pretty big market to get into, so it might be worth the investment. But if you have interstate commerce lifted and you allow states to come in without that barrier of it, basically you have to sell it where you grow it, then you're going to see it become much cheaper for cannabis companies to be able to come into states like New York or even into Florida or other states where it could potentially become legal soon and establish their footprint and the cost won't be nearly as great. So there's a lot of headwinds there for cannabis companies. I think some of them, federally legalizing cannabis eliminates a lot of them. But still, I think there's got to be some bigger investment from larger companies into these smaller cannabis companies to make it profitable and give them an infusion of capital and maybe reduce a lot of that debt load that they're carrying. So I really hope that answers your questions. Please keep them coming. Let me know, why are you interested in cannabis stocks? Why are you interested in the cannabis market? Email me at feedback@moneyandmarkets.com. It's feedback@moneyandmarkets.com, and let me know kind of what you think. You don't have to give me any specific details. You can if you'd like. I've had people tell me how much they're invested in it, and that's fine. I appreciate that. You don't have to. Just tell me, why are you interested? What's your story? Why do you like cannabis stocks? Don't forget, if you're interested in listening to the Marijuana Market Update, as well as any of our other YouTube videos, such as the Bull and the Bear podcast or our Week Ahead, make sure that you subscribe to our YouTube channel. Just go to youtube.com, type in Money and Markets. We've got the green logo. Go to that page, hit subscribe. You'll see a little bell that pops up, and it allows you to be notified whenever we put out a new video. Make sure you click that. And that way, every time we put a new video up and it's uploaded, you're going to get notified first before we put it up on moneyandmarkets.com. So it makes you kind of an insider. It works for all of our videos, so make sure you do that. That's really about all for me this week. Coming up, we'll have more on the Bull and the Bear podcast this week, as well as our Money Markets Week Ahead, so stay tuned. Check out moneyandmarkets.com every day for new content. We hope to provide you safe and profitable investment information to help you make smart decisions with your money. For that, I'm Matt Clark, research analyst for Money and Markets and host of the Bull and the Bear podcast. And until next time, everyone, safe trading.